Bitcoin makes headlines again. As we close out tax year 2020 and Bitcoin reaches all-time highs again, the IRS will be waiting for their fair share of your gains. Hello everyone, welcome to CPA Explains. In this video, we're going to be talking about the latest IRS guidelines for Bitcoin and virtual currencies so you can be ready for the next tax season. Please note that this video and all videos on this channel are intended as purely informational. You should always consult with your professional tax attorney or CPA if you're unsure about your tax filings. In 2014, the IRS acknowledged virtual currencies and released Notice 2014-21, which answered some questions about how Bitcoin and other cryptocurrencies should be taxed. This notice stated that for federal tax purposes, virtual currencies are treated as property. This means they'll be treated similar to how stocks, bonds, and other property is treated for federal tax purposes. So anytime you dispose of Bitcoin, which is held as a capital asset, you would be subject to capital gains or losses. The IRS also clarified that like-kind exchanges are not allowed, so any exchanges between two cryptocurrencies would trigger a taxable event. This means if you trade Bitcoin or another altcoin for something else, you will trigger a capital gains or loss calculation. To calculate your capital gains or losses, you would take the fair market value for which you sold your Bitcoin minus the cost basis for that Bitcoin. So essentially, it's the price that you sold it for minus the price that you paid for it. The most difficult part of this calculation is understanding what cost basis you need to use. Since most Bitcoin investors are buying Bitcoin on different days at different prices, understanding which Bitcoin cost basis you're selling could be a challenge. You can apply different cost basis calculation methods when calculating your Bitcoin capital gains, but some of the most popular would be the first in, first out, and the specific identification method. The first in, first out method is just what it sounds like. The first Bitcoin you bought would be the first ones that are sold. So here you would keep track of your costs of each of the dates that you bought Bitcoin, and then as you sell them, the first ones that you bought would be the cost basis that is being sold. With the specific identification method, you're able to specify which Bitcoin cost basis you're selling. There could be advantages and disadvantages in using either of these methods, but it really depends on what price you bought Bitcoin at and what you're really selling to understand how it would impact you for tax purposes. The timing of your sale could also impact what rates you're being taxed at. Property that's being sold within 12 months of the buy date is subject to short-term capital gains. These rates would be the same as your ordinary income rates, but if you do hold on to the property for over 12 months, you will get the benefit of the capital tax rates listed here. Now, that's just a brief background of how Bitcoin and cryptocurrencies are taxed as property and how you would calculate the capital gains. More recently, in 2019, the IRS released Rev Rule 2019-24, and then some additional information about airdrops, soft forks, and hard forks. All of these documents are issued by the IRS, and I'll leave a link in the description of all of the PDFs so you can look at them all in detail. In the guidance released by the IRS, they went into details about blockchain soft forks and hard forks. With a soft fork, the code for the blockchain is being updated, but there aren't any new coins that are being created, so there shouldn't be any tax consequences. It's simply an upgrade to the protocol. Now, if there's a hard fork in a blockchain, this usually means that there is a split in the code and two or more branches are created. This means you will receive new coins after a hard fork, and the IRS has specified that those new coins will be treated as ordinary income. According to the IRS guidelines, the fair market value at the time in which the new coins were received is the amount that would be included in ordinary income. If you were to sell these new hard forked coins, you would also be subject to capital gains or losses using the fair market value at the time you received them as the cost basis. Similar to hard forks, if you receive any airdrops of virtual currencies, those are also subject to ordinary income at the fair market value at the time that you received those airdrops. So with all of these different IRS guidelines, how can Bitcoin investors be compliant when filing their taxes? On the tax forms for 2019, the IRS for the first time included a question on Schedule 1, which asked, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Any individual that has done any of these during the tax year should mark this question as yes. Additionally, if you were subject to any capital gains or losses, you do need to file a Form 8949. The calculation to get the capital gains or losses to fill out the Form 8949 can get really complex. You do need detailed information for all of the transactions that happened throughout the year. These can be found in reports from the exchanges that you can export, and I recommend using a software solution, something like Bitcoin.tax or CoinTracker, that can help you identify the cost basis and calculate your capital gains or losses. I personally use Bitcoin.tax, and I have for a few years, and I use it to calculate my capital gains or losses and also to track all of my cost basis for any purchases that I make during the year. And finally, if you have used any cryptocurrency exchanges which are overseas, you may be subject to FBAR foreign reporting, which is a statement of the specified foreign financial asset. And on this form, you just specify if you've held over $10,000 in assets in any foreign bank accounts. So this would include any of the cryptocurrency exchanges which are located overseas. So if you have held over $10,000 in assets at any time throughout the year, you do want to make sure you file this form. You may also be subject to FATCA reporting, so make sure you know all of the different foreign requirements before dealing with any foreign exchanges. So that was just a summary of the major areas of how Bitcoin and cryptocurrencies are taxed. There's a lot more information that we couldn't cover in this video. Please look at the links below and read the IRS guidelines if you need more detail. Thanks everyone for watching this video. If you like this content, please consider subscribing and liking this video. If you have any feedback or questions, leave them in the comments and I'll be sure to check them. Thank you.